Hospital chain Fortis Healthcare has reported steady growth, made new investments, and recently acquired full rights to its brand name. We will discuss what these changes mean for the company and what lies ahead for the business. I'm Neetu Chandra Sharma, and joining me is Dr. Ashutosh Raghuvanshi, Managing Director and CEO of Fortis Healthcare. So let us begin with the financial results. The company has just announced its quarterly results along with the full year numbers. So I've seen that operating EBITDA rose 25% for the year. So what were the key contributors to this performance?
Yeah, I think one of the performance has definitely been very gratifying in the last quarter. One of the major contributors was the occupancy numbers compared to last year. Last year was about 67, but this year is around 69. RPOP growth was also there, which was primarily based on the case mix. The complicated cases were more. The proportion of oncology is higher, and which brings to higher RPOP because of a lot of daycare work which happens in oncology. So because of that, we have seen a very good growth. In oncology segment, we have seen a CAGR of about 23% over the last 2-3 years.
So there was a decline in the hospital business margins in the fourth quarter. How do you explain this trend? Is it seasonal or something else?
Yeah, margins have actually not declined in the fourth quarter sequentially also, if you see. It is about, I think, 20.5% in the hospitals. So if you see from year to year, last year was 18.6%. So there has been an improvement. Overall, in the financial results below EBITDA, if you see on the operating level, we have done well. But there were some one-off items, there were some write-offs, etc., which happens at the year end. That is why the profitability is slightly reduced than last year.
Fortis has also now secured full rights to the use of the brand name after paying 200 crore rupees. So, what was the strategic thinking behind this step?
Yeah, Fortis is a pretty strong brand, and we have been known as Fortis for last 25 years. It is very important for us for that reason. Changing a brand is a Herculean task. It is expensive as well. So we felt that this brand has unique value and proposition, and we would like to continue with it. And we were paying a significant amount of money, 0.25% plus taxes of the top line as a royalty fee for this brand. So the options were either to save that money and change the brand or buy off the brand. So since we were getting the brand at a very reasonable value, which would be much less than changing the brand, we decided that it is worthwhile to do that. And that's why we participated in the auction. It was a court supervised process, and we won the bid.
You have also announced acquisition of a hospital in Jalandhar. So, are you planning further expansion in tier 2, tier 3 cities?
Yeah, so we are not specifically looking for tier 2, tier 3 cities. However, Jalandhar fits into our strategy because in Punjab, as you might be aware, we have a good cluster. We already have 4 units over there, 2 in Ludhiana, 1 in Amritsar, and 1 in Mohali. So with that, Jalandhar makes a lot of strategic sense as there will be a lot of synergies with the existing operations in this area. Plus, we are a very dominant player in Punjab. Already, we have close to about 900 beds. And with these additions, we will have almost for 1,200 beds, and then following that with the expansion, brownfield expansion, which we have planned in Amritsar and Mohali, we would have close to 2,000 beds in Punjab, and that would make a very substantial cluster, and we'll be way ahead of all the competitors in that zone. So that is why we have chosen this particular project. But we are not specifically looking for newer geographies to enter with the tier 2, tier 3 cities. The main clusters which we are present, we are looking for opportunities in those clusters, and if we can develop some new cluster around them.
So, having said that, are you also planning some more acquisitions, and what kind of opportunities are you evaluating at this point in time?
Yeah. So essentially, the parameters to decide an acquisition is always based on how much value can we drive out of the project and what kind of valuations we are getting at. We are looking at both greenfield as well as running hospitals for acquisition. Greenfield could be built to suit kind of models along with builders and other partners. So those are the kind of projects which we are looking for. We are looking at projects in NCR, Mumbai region, and Bangalore as well.
So, Fortis also invested around rupees 800 crore in capital expenditure. Could you please break this down where this investment is being deployed?
Yeah, so last year we have invested approximately 800 crores, a little less than that. And most of it, about 500 crores, has gone in replacement as well as upgradation and growth capex within the existing hospitals. And the rest has gone in the expansion project of our Noida and Faridabad facility, where we are adding additional capacity, which will come online now. So in Noida, we have already received the OC for the new tower, and so is in Faridabad. So both these hospitals put together is approximately 200 beds, which we will commission by the early next quarter. And then there is another tower project which is going on in the FMRI hospital in Gurgaon. That also is going to be now is getting towards completion and will be commissioned by the end of this financial year.
So, let us also talk about the diagnostics business. How has Ageless performed, and how do you plan to build this business further?
Yeah, so as far as Agilus is concerned, the revenue figures have been rather flattish. We haven't seen much growth in this business. As you know, we have had some challenges in terms of brand change in this business, which did impact the business significantly. So now that is behind us. Now the new brand Agilus has been well accepted and is well known now. And but on the profitability side, we have improved from last year. Last year was about 17.3%, whereas this year is about 19.8%. But there is still a long way to go. We have increased the number of customer touch points. We have opened certain new labs in genomics as well as in transplant immunology in Gurgaon and Bangalore, respectively. At the same time, we are expanding the network of the collection centers as well. So with all these measures, we expect the top line growth this year to be much better. And somewhere in the double digit figures, and that will consequently flow to the bottom line as well.
And a very obvious question, is an IPO on the table?
So at the right time, we will take a decision as to what is the future course for this business. Right now, we believe that we need to strengthen this business and bring it at par with the other industry peers. So the focus this year is going to be on consolidating this business and taking the profitability profile, improving that, and also having a sustainable growth.
So the net debt has also increased due to the Ageless acquisition. So how do you view your current capital structure, and will you also look at raising funds or focus on reducing debt?
Yeah, so right now we are comfortable. All the brownfield expansion which we are doing is within the internal accruals. So the debt level is unlikely to increase unless we have some major acquisition coming during the year. At the moment, it is about debt to EBITDA ratio is about 1.3, which is still quite sustainable and healthy, and we would be comfortable up to level of 2. We don't have a concern about debt level at the moment. The year is likely to end at the same level. We are not looking at specific fundraise. However, as I said earlier, if we are going to do any significant acquisitions, we may require funding, and at that point of time, we will choose the best possible route.
Let us talk about the medical tourism business. The revenues increased by 17%. So if you can tell us that which geographies are showing interest and how are you strengthening this segment?
Yeah, so the major increases have come from Central Asia as well as from Africa. We have seen some numbers going down from the Middle East. At the same time, we have also seen a significant drop in the traffic from Bangladesh. So that has been the trend. But the growth last year has been quite gratifying. Our overall business is about 8% is international business. Hope that this trend will continue. The current geopolitical situation might impact, but at the moment we are not seeing any impact. We will be a little cautious in our outlook of this business. So we expect that at least we will maintain the same level of about 8-9% of our overall revenue.
If you can tell us that how digital channels have contributed to the business and what is your approach to integrating digital platforms to the core operations?
Yeah. So digital channels are very, very important channels, and they have grown quite significantly. And currently, almost 30% of the revenue has come through the patients who have come to us through the digital channels. So we will keep on working on them. The idea for us, as they are well integrated with the core business, in the sense that we are not really providing any digital services per se. This is just a channel for us to engage with the patients, both in terms of them seeking their records, making appointments, making payments, etc. So we will keep on enhancing that. We had started a project of EMR last year. 14 of our hospitals today have the outpatient EMR, and the rest inpatient EMR is also in the process of implementation. By the end of the year, we are going to have a complete EMR in place. So that will get integrated to the patient application, which through which patient can communicate and interact with the hospital and the clinicians. So it is essentially, the idea is to improve the quality standards and the interaction level with the patients and be able to serve them better. So we will keep on enhancing the experience on the digital side, because this is going to be an important channel, much more than what it is today.
Dr. Raghuvanshi, thank you so much for taking time out for us and telling us that what are the directions and priorities for the company and what is the road ahead.
Thank you. Thank you.
While we follow this development, stay tuned to Business Today for more updates.
If you like the video, do like, comment, share and subscribe.